Good morning. It is Friday. It is Commodity Corner. It's the Bubba Show. So we've been watching these commodities, and as we can see, the commodities continue to work their way either in consolidation or work their way lower. We have seen this now in gold for a number of weeks, and gold is at that key level of 1550. It's an old level that's held, and if it holds, we could probably get a reasonable bounce rally off of it. But the trend in gold continues to be lower. We have now seen that crude oil has finally given up and is really just starting to sell, which is where it should have been in the first place. But part of what we had was we had that overall fear from the Mideast, which was artificially inflating it and keeping it higher. We've got the grain markets that have been whipping around, but whipping away around and making lower highs and continuing their bear market. And of course, as we've talked about here many times, the US dollar is gaining strength at every stride, and the euro currency and the rest of currencies are falling. What does that mean? It means that commodity prices are going to come down. It means that the risk is coming off the table, and people are taking their money out of the commodity space and trying to find safer asset classes like the US dollar. Okay, so when we take a look at the overall picture, yes, there's a couple of commodities that will have some spike rallies because, most of the commodity space now, soybeans, wheat, bear markets. So you will have some vicious rallies in those. Corn in a downtrend within a congested market. You had last week, you had a big spike of an orange juice because that was an event, that was a weather event that everybody jumped in. But you can bet your sweet potatoes that oranges will be going back down again, and that was just strictly a spike rally based on a weather effect, somebody trying to take advantage and people getting trapped on the short side of a market against weather conditions. These are things you want to take note of. This is telling you that assets are rolling into safer classes now. And as that happens, and it doesn't mean the stock market's going to break now, it just means that that's something to keep an eye on. Okay? But take a look at it. Soybeans, bear market. Wheat, bear market. Gold, almost a bear market territory. Crude oil, downtrending. All the other commodity spaces, working their way lower. Silver. Okay, I think the only metal that's higher is palladium. Doesn't matter. Look, as I like to say, follow the money. The money will give you the best idea and the best footprint of what's going on. Stronger dollar will typically mean weaker commodity prices. Stronger dollar means people are looking for safety. They're putting it in US dollars because when it comes down to it, money is going to go into the US dollar or treasury bonds when there starts to be fear. It's another way to sniff out potential volatility. So a lot of the money is going into those asset classes now of the bonds and the dollar because people are starting to get afraid. And it looks like this rally is built on the last minute guys trying to get in on the retail. My predictions for the week. I predict the Dow will be somewhere between 14,000 and 14,500. I'm not going to try to call it down because I can't really. I think 14.5 will be the upper limit here. I think gold is going to bounce a little bit. I would look to be a seller somewhere around that 16.20 level. I look for crude to have a little bit of a bounce, but I think the trend will be lower, and I look for grains to sell them at every opportunity. For Friday, the Bubba Show. Have a great weekend already. We'll see you on Monday. Enjoy. Thanks so much.